Let me pick up a little bit here on what's moving these markets right now. Apparently, the biggest dove on the FOMC who gets the vote, there's probably one person more of a dove than Lyle Brainerd. She came out pretty hawkish today. What's amazing to me, though, is I don't see anything surprising, right? All the doves have been hawkish. They know what they've got to do, and yet this market is taking a pretty good hit here. How do you figure this?
Look, I mean, you got to look at back the last 5 weeks. 5 weeks ago, the 2-year was trading at 1.35. Now it's at 2.5. Now the market is pricing in 3 consecutive 50 basis point hikes in the next 3 meetings. This is a big deal. If you believe, like I believe, and I'm sure you do too, that the last 10 years, probably even longer than that, the absolute value of the S&P had to be balanced against what the alternatives were. And in the fixed rate market, there was no alternatives. Now, I don't know that there is an inflationary market, but we're getting to a point where the stocks have some competition. So I think this repricing has to happen. I think it's a big deal.
So I'm glad you brought that up. And before I get to Lee, let me pick up on that, and I'll ask both of you. Okay, we know yields are going up, but real yields are still negative. So aren't we still in a sort of there is no alternative to stocks?
Yes, but it's changing. You know what I mean? There's no question that I don't want to lock up 10-year money at 2.5 in this environmental in this environment of inflation. It seems ridiculous to me. But I think things are changing, right. and as the story changes, we have to readjust.
So Lee, I mean, listen, we've been looking for at least a month or more. The Fed, a gazillion rate hikes, let's call it that, right? We gave up on how many they're going to be. We know it's just going to be unlimited. And a lot of people saying, despite that, despite what the street sees, they don't think it's going to actually happen. They'll hike a few times aggressively in the next couple of meetings, and then after that, they'll take another wait-and-see approach. How do you see it playing out?
Yeah, well, look, I'd say the Fed is like me in high school football. It's completely offsides. And when you play center, it's a huge problem for the team, as it is with the Fed being completely offsides with inflation. So I think the Fed should have probably gone 50 at the first meeting. I think they should go 50 at the next couple meetings. And then we really have to see where inflation is. Is this rate of change decelerating or is it still accelerating? Ed Yardeni mentioned the wage price spiral. We're in the middle of it right now. Can they slow that down by taking this liquidity out? And if they can't, we're going to get a lot more hikes than I think the market sees right now, right. And that will kind of take us into the recession everybody's worried about.
All right, so you're known to be relatively bullish, but you kind of toned it down recently. After that nice bounce we saw, have you begun to change your mind, or are you going to be concerned again because the potential of the Fed to wreck everything?
Yeah, well, look, everything hinges on the rate of change with inflation. Is it still accelerating? Because at this point, we should see a massive deceleration. You've seen big moves in credit spreads. You've seen liquidity conditions really tighten up. And as Jim just mentioned, the 2-year Treasury is at 2.5%. That's up from 20 basis points in September. So you've already taken a ton of liquidity out of the market. If this doesn't slow inflation dramatically, that means we need to take a ton more liquidity out of the market even on top of this. Right. So when you have a slowing economy and liquidity coming out, you get multiple compression, all right? And so what I like to look at is not earnings or great ideas. It's what drives multiple expansion and compression, because not as many people look at that, and it's a lot easier to handicap the market that way. So in multiple compression, yeah, you can stay long, but I'm long defensives. So energy, utilities, staples, that sort of thing.
Yeah, I mean, it's really been amazing. Utilities, defensive, I feel like until today, defensive was taking money maybe from the value crowd. Jim, did I read this right? I saw somewhere where you said Bitcoin could be on its way to 60,000. I didn't even know you were in Bitcoin, but if that's the case, what's going to spark the move?
I'm not one of the Bitcoin lunatics. I'm just a casual observer who's intrigued by the product. But hold it. First of all, Mike said they should have hiked 100 basis points 8 months ago and stopped buying mortgage backs into the teeth of a wildly hot housing market. But yes, Bitcoin, there's 2 things that happened big over the last couple of weeks. 2 months ago, Russia said they were going to crack down on Bitcoin, and all of a sudden they pivoted and started saying that they may even accept it for oil. Japan talked about unlimited QE essentially to keep 10-year yields at 0.25, and Bitcoin responded. Interestingly, it actually kind of defined itself a little bit. It jumped out of a trend channel that had been trading in and above 45,000. To me, this has been the biggest affirmation of Bitcoin and what its purpose is going to be going forward that I've seen in the last few years. And again, I underscore the point that I'm not one of those diamond hand holder lunatics, but I do think Bitcoin could head up to 60,000 in the next month.
And I tell you what, that makes you a friend of the diamond hands. So either one of you guys buying Twitter here. I don't think any of you will be chasing it here, but you got to love the news, right?
Yeah, I love it, Charles, and I'll tell you why. If you look at what's happened with Tesla, you have a cult-like stock ownership following of Elon. I think that transitions with Elon over to Twitter. I think you're going to see structural change there. So macro conditions, slowing economy, good market, bad market. When a company fundamentally changes, it can operate independently of all those other factors.
You know, I was stuck in a.
But this isn't just.
Go ahead, real quick, Jim.
This isn't just a big headline for Twitter. This is a big headline for tech in general. If we're going to have an open platform where we can actually discuss things and not be banned, it's a huge deal. I love this story.
It's a huge deal for the First Amendment, and I think for America in general. I'm really thrilled with the news. Plus, I'm finally back to break even. Jim, Mike, thank you. Thank you both very much. All right, folks, coming up, Ukraine's president addressing the